Well, we all remember back in March when we learned the category of essential worker, and many companies stepped up very quickly to increase the pay that their essential employees, grocery workers, the folks at McDonald's, folks at Starbucks would receive in order to keep coming to work in a dangerous situation. Well, now things have started to normalize, and Melody companies are increasingly discussing rolling back some of these pay increases. You know, folks had gone from, let's say, $9.50 to $11.50 an hour, 11 to 13. These are large percentage changes for a lot of people. I think I saw it at the time as probably a step to permanently raise. And I think we all agree that a lot of these folks probably deserve to make more money than they'd been getting paid. But companies are now looking at this period as a time to begin pulling back on these. And I think it's going to be probably a rocky period for labor and for the companies that try to do this perhaps too quickly.
Yeah, and it's an opportunity for a lot of really interesting sound bites. One phrase that I've been hearing a lot is from hero to zero. How can it happen so quickly? This weekend in particular, Kroger is actually rescinding that $2 raise it gave to store employees, warehouse workers. Target and Amazon will be following suit later this month. Of course, Amazon had first set earlier in May as the deadline and then extended it to May 31st. So starting June 1st, wages will go back to normal. I do think that there is something to be said about this idea that we've discussed so often about what it means to be essential. And of course, during times when lines are out the door and it feels like the pressure is on, and now we can go to a store without that sort of feeling of claustrophobia. There is just so crazy how within a couple of days or perhaps a week, this sentiment has completely shifted, right? And now it's almost like business as normal, or that it's almost like an amnesia effect where, oh yeah, that was a pretty big deal. And now we kind of have to look at our healthy balance sheet. I think overall, I've been hearing a lot of labor unions, labor advocates, of course, reeling at this because to your point, they thought that this was momentum to potentially fight for that $15 floor. As we know, the minimum wage federally is still $7.25. And as I understand it, the median salary for a retail worker right now is still $11.20. So to your point, Miles, I don't really understand how that could be a sustainable system as we move forward.
Yeah, you know, as Melody said, sentiment has shifted. I think that's the real key here. And it's a shame. I mean, at the peak of things, companies were eager to get out there and get their message out and look very magnanimous. And, oh, here's the extra pay we're offering. It was like the various food chains that still had certain locations open, whether it was drive-thrus, whatever, Starbucks, Dunkin' Donuts, that were coming out and saying, oh, we've got a special deal for our hospital workers. We need them so much. We're giving you free coffee for the week. And a lot of those have faded by now. And part of that, I mean, realistically, is because it's gone on long enough that companies feel they can't continue to take the financial hit. But I also think part of it is the optics. You know, the time to get the credit for doing the nice things has faded now, and they don't think the backlash will be big enough to really be an issue. But look, if labor representatives get involved, maybe we can actually affect change.
Yeah, I think that having those conversations are really important. Companies, you know, Disney's trying to figure that out. There's issues here from how much you're paying people to also how you're protecting people, and protection costs money as well. We've heard that, you know, from Amazon, how much they're spending on it. But to go back to the Tesla story, I mean, these need to be, if you think a V-shaped recovery is coming, then we're going back to a tight labor market. You actually, as a company, can benefit by valuing your employees in this time. Because if you think we're getting to the other side of this and we're going to be back to full employment, having people on your side is going to be important. So this could be really short term here. I do think, though, we could also see labor make some moves here, and also people with their pocketbooks. And we'll maybe see more strikes if these get rolled back, and people not ordering from Amazon for a day, not ordering from Instacart, getting more people involved in this case.
And then, Jen, it's interesting because precisely because a lot of these corporations are aware of the PR potential flubs, right, that we're already discussing, they are offering one-time bonuses still. I think Kroger is offering $300 extra bonuses. And this reminds me so much of those corporate tax cuts and those one-time bonuses. And I had kept a running list of all of those companies that were trying to offer those and how short-lived those really were. And that was the same thing when Amazon first made that announcement, raising their minimum wage to $15. But then we saw that overall compensation for the average employee actually went down because of less incentives, less equity. So just thinking about the calculus that these companies are making, to your point, they're not actually serving the employees, even if a lot of the time the standoff or the out of context quote could make it seem like that.
Yeah, I just think it's going to be interesting to see, which companies realize that if you run your business more like Costco, you get Costco-like results. I mean, I actually think Walmart's made a lot of strides in the last couple of years. Target has raised wages over the last couple of years, and I'd be surprised if those were companies that swiftly rolled some of these things back. Amazon and its relationship with labor, long story there, not a surprise. But I think being more Costco-like is probably a good principle for a lot of businesses across industries.